Wednesday, March 19th. Market analysis, Stan Ehrlich, good morning. Talking about the stock market indexes first, always, and then we talk about futures markets. Okay. We have a double or triple top that formed starting back in early December and started to work its way lower toward the end of November. I'm sorry, February. So only about 4 weeks ago. During that time, it came all the way down, broke out of the pattern at 58.58 and started to trend lower again. The minimum downside objective, 54.99 or 5,500, we almost reached just a few days ago in oversold conditions at a support level and bounced right off of it like a ping pong ball off of granite. Bounced up a couple of days worth, and that was Monday, the high. Came down somewhat yesterday and is now coming back a little bit today. Note, we didn't get below Monday's low. We didn't get above Monday's high. That's a doji, or an inside trading range day. Currently, we are up about 3.5 points, or 34, if you talk a mini talk, as opposed to SPY. So it's not really doing too much except bouncing very slightly. Do we have a low last week that's going to produce more of a rally than it has already produced, which was not bad? Maybe. I can't say. I would not be surprised to see it come up to 5,800 and maybe up to the original breakout level of 58.57. But I don't expect anything more than that if it can do it in the first place. I do expect that soon, maybe in a few days, a week or two, we will be dropping under 55.61, which is basically the bottom last week, and finally reaching my minimum, could go more, downside objective at 5,500. So that's basically what I'm saying for the stock indexes as a whole. There are little idiosyncrasies with the other indexes. Let's go look at the short-term chart, 1-minute chart on the mini. It simply popped up to a little resistance yesterday's trading range and dropped off to going flat the last couple of hours yesterday, significantly lower. Overnight, sideways, little bounce, tried to make a new low, couldn't do it. So far this morning, a high higher than yesterday's highs, couldn't do it. And we're dropping down some, but still up 3.3 on the day. Spider, pretty much the same story, but because the trading hours are different, the S&P, SPY, the big boy, did make a minor new high today than yesterday's high, but there's no breakouts to the upside or downside one way or the other. And my minimum downside objective, which is very similar, of course, to the E-mini, has not yet been fulfilled at 542. And that's very close to some support. That's what I'm looking for. Maybe after a little rally, more than we've had, up to 575. And in this particular case, I have to add 580 to the list as far as how much strength we might, and I'm not very confident about that, see in the next few days. 1-minute chart on the spider. Not showing you much this morning. QQQ managed to get above yesterday's high very slightly. We did not get below yesterday's low. I remind you that everything was oversold decently, not huge, but pretty decently just a few days ago. So oversold conditions, in this case, not in a support area, but a little bit below it, caused the bounce, stopped at resistance, the top of the resistance area now that we've gotten below it. And since we're inside of it at the moment, Monday and Tuesday and today, and even Friday of last week, the bottom is a little support and the top is a little resistance until you move out of it, which we will, guaranteed, and pretty soon. It just never stays going sideways for very long. And looking at the 1-minute QQQ, not really giving us too much help. We did get above yesterday's high, but I don't see anything happening here that I would be interested in talking about. So NASDAQ, Doji, inside day, basically bottoming out in a support area, oversold conditions. And again, a Doji sideways, a little higher on the day at the moment. My expectation of a rally extends to the NASDAQ chart. It did not get to my minimum objective, although it came the closest of the other indexes. And I still think there's a chance of a pretty decent rally, but I don't think it's going to continue to trend higher and make new historical highs like I do think we're going to see later this year. Summer, fall, something like that. I don't have a strong handle on when at this point. NASDAQ 1 minute chart coming up a little bit for a day or two. Nothing special. The YM, a little bit different story. Double top formation like the others. Breakout to the downside. Got oversold at support. Bounced very nicely. But since we weren't too far away from the original breakout level, the resistance level, it stopped Monday, yesterday, and so far today at that level. Now, if I'm going to get more follow through to the upside on the other indexes, I've got to assume that the YM is going to be able to pop through this resistance somewhat and go up a little bit higher. I can't rule that out. But so far, this is acting exactly like the resistance level should make it act. And in the YM's case, I think the rally might be over and it's going to go right into new low ground, back into support, and then keep on going down to the minimum objective, which is 38,631. Quite a bit lower. We did not come close to the downside objective at all in the YM, maybe halfway down at best. So this is held up a little bit better, but the formations are the same and the expectations are basically the same. The 1 minute chart now making minor new lows for a couple of hours. Yep. Okay. Well, what about the Russell? Well, it's a different animal. We dropped out of support from major resistance areas in general, all the way down to the next support level last week, hit it very accurately, oversold conditions, and have a bounce. This bounce could extend up to the resistance of the red area at 2145, no surprise, and then turn down. We're starting to get between a rock and a hard spot here and bounce back and forth maybe for a bit. And the 1 minute Russell. Have it coming down at the moment with everything else. Now, bonds. This circle I drew, this green little circle I drew back on approximately March 5th, well before a 2 or 3 day rally containing a bearish engulfing sell signal just in time to drive it south and touch my circle. Now, I wanted it to bottom out on Friday of last week. It bottomed out on Thursday so far. Missing by 1 day is pretty accurate. The price level I wanted was about 115.11 or right around there, 115.11 I think I've been using. And that was basically the lows that took place right here in the left-hand shoulder in November. The head of the head and shoulder bottom is a buy signal on January 14th at the very bottom perfectly. Also the very bottom perfectly of a broad 1.5 year double bottom formation, which has a breakout way up here at 127-ish. And we are maybe forming the last shoulder on a smaller bullish formation, which started in November, and it's a head and shoulder. And there's the head, another buy signal. And we may be, looks like we could be, I think we are, I want to say we should be making a last shoulder low in the last few days. I need to get above 117.21 on a close to feel a lot better about that. That would be challenging resistance again and going up into it and hopefully through it. And the neckline is going to be broken at approximately 119.10. The minimum upside objective on this head and shoulder bottom starting back in November would be a minimum objective of 128 and close to 129. But the profound thing about that is if it gets there, it'll be breaking out of a double bottom formation that I've already outlined. What about 10-year notes? Its double bottom is a lot more accurate, very much so. And yeah, I wanted to leave that there. It was just a marker. Okay, good. We did not make new lows lower than the last October of 2023's lows by only a day or two and not by much. And that was November 13th, which is also the head of its head and shoulder bottom. First shoulder November. We unfortunately didn't get a buy signal on January 13th or so, or 14th. And we don't have a buy signal in the last shoulder low, which looks like it's trying to be formed. We are close to making a minor new low here. We are not oversold. So there's room for it to go down a little bit more, kind of like my bonds. But I'm thinking maybe it's not going to do that and start to turn back up right here at support. We'll see what happens. Even if it does make a little bit of new lows, it could still easily be the last shoulder low if it can turn up again in the ballpark of, I don't know, 110 and a half, maybe even 110. Next, crude. Minor new low for a couple of days. Yesterday had a bearish engulfing. I mentioned it. It should make the market go down some. Today's low is lower than yesterday's low. That's down some. At the moment, it's a little higher on the day. We've got major support area a little bit below the market. We didn't get to it yet. So I think there's a good chance this market still is going to be pushed down to minor new lows here for March and bang into the support area, hopefully also in oversold conditions when it happens, and then turn up big time. Now, it wouldn't surprise me if it turned up now, because we did all of that stuff except not quite so accurately and didn't quite get to support. We got oversold and got close to support. So there might be a little bit more elbow room below the market and then turn up, but it could turn up right now. Heating oil, sort of the same commentary, but I've got a resistance area that we're in now, although this is a minor new high for already over a week. So this low, I think, did the job, oversold, and we're probably going to head up a little bit higher. I'm expecting a minimum of 230, then a test of 245. Next, natural gas, kind of the same, in a support area, did not get oversold, don't have any help from that, but the trend is definitely up. One significant problem I've got with that statement is that this was a classic blow off top at the very top of the market. And that day was March 10th, of course. Not only that, besides making a new high by a large amount, and closing below other highs, nearby highs, which is not a follow through, not good. It also gapped up. So there you have a fairly rare upside exhaustion gap with exhaustion strength and a bad closure, all of it adding up to down we go, which it did exactly that for 3 days. Now sideways and showing some minor strength evidence. If we can only rally back up to 4.3, you may make a shoulder. The neckline would be slanted across, of course, the low that was made on March 3rd and the low that was probably made yesterday. Fairly upward slanted angle, but timing is about right. Price levels are just a little bit higher. Doesn't have to get that high. Could even get a little higher. But somewhere in the ballpark of, I don't know, today's high is probably the lowest I would expect, to more likely closer to 4.37. Then turn down, you got yourself a small head and shoulder top. Next, gold. New high again. 4th day in a row of new highs, and now coming much closer to the minimum upside objective because of the pennant formation and measuring the staff of the pennant, the flagpole of the pennant or staff before it formed. That's the higher one. The lower objective was measured by taking the widest point in the back, the left-hand side of the pennant formation, and seeing how high that is, how many dollars top to bottom it is, and taking it from the breakout point and measuring it up to here, and that was already fulfilled last week. So are we going to get to the bigger one? Sure looks like it. Just because we're overbought does not mean it's going to top out today or the first day or even the third or fourth or fifth day that it's overbought. Although historically, overbought conditions don't last more than a few days on the average. Sometimes, and you can see one right here, only last January, you can maintain an overbought condition for a couple, 3, 4 weeks. So this is a helper to pinpoint, to be expecting, I shouldn't say pinpoint, to be expecting the market to start to roll back down. Now, how do you pinpoint the day, or even more accurately than the day, the hour, for example, that is actually starting? Well, objectives could be reached, historical resistance levels could be reached, resistance lines, trend lines, etc., could be reached. Other indicators could show this basically the same likelihood. Other indicators that are based on like hourly data or shorter time frames could show toppiness. They're all shorter the time frame, the trickier it is to use them. So those are just a few of many tools. Fibonacci objectives, you name it. Swing objectives, cyclicality, rhythms in the market, timing wise. Okay. Silver, overbought, right in the time frame and in the price range for the possible last shoulder. Now, this first shoulder was May of 24, almost a year ago, 10 months ago. The head of the formation is still okay. It's fine at October 22nd of 24. This last hypothetical hasn't happened yet. Last shoulder high is about right timing-wise, overbought conditions, and the price level is just a little bit higher than I thought it might be, but not much. I like what I see here. Timing is good. We're only about a week or two from the exact timing point, and I use this little stick right here to measure the distance from the highest high and the shoulder top right here to the high, and then you grab that measuring stick, time measuring, and you put it on these highs, and you go to the future, and you see that approximately March 31st, so the end of the month. What's today? The 19th, 18th? 19th. So you don't have to wait too long. So I'm thinking maybe it's going to be a hair early, and we could be ready to turn down for a very large head and shoulder. I'll be talking about that for months to come if it starts to work. Platinum, not the same, but you do have overbought. You do have resistance. You do have a big break starting today. Yesterday, it simply closed lower, being overbought after hitting resistance. Great little signal here. And that's not really a signal per se. It's just a strong likelihood. Okay, so now I'm looking for a bit more of a dip, probably down to 977. I can't rule out 938. It's going to be fairly good if I'm right. Next, overbought more today in copper. Now we're solidly in overbought condition, and it's in very free territory. So the only thing I can see at the moment that's going to be stopping it would be the previous tops, and that's at 5.36. And that high was way back on May of 20th of 2024. So quite a while back, but that's about it. So it could rally up a chunk more here before it turns down. But I'm always leery when we start getting overbought or oversold that a turn can happen at any time. Next, grains. Well, I'm still sticking to that long-term bullish story I've been talking about for many months. It's still good. We haven't broken the pattern. It's still holding its support. Got oversold a couple of weeks ago, March 5th, tested lows, didn't make any new lows, held its support, started to work up a little bit yesterday and the day before, minor new highs for a few days, and we dipped down a little today. Today doesn't mean much to me. I just don't want to close below 991, 992. That would not be good. Closing above 1022 would start to raise one eyebrow at least. And of course, the higher you go, the quicker you do it would be much more optimistic for this long-term bullish story. I've got soybean oil doing the same thing. This one has a trend line that held, oversold, minor support. Now we've got to get above and stay above and trend higher above the resistance levels. Soybean meal, minor new low today for a week and a half and a minor amount below a support area. So this is not looking particularly good. It needs to turn around right away and at a minimum close back into the support area, I would hope. That's today, maybe tomorrow. And then, of course, start to rally above 309 for soybean meal. The more it goes down, the more I'm going to be disappointed, the more likely it's going to ruin my long-term bullish story because of major support area and previous lows. Next, we got corn coming along okay. Possible giant head and shoulder bottom, first shoulder low. Bullish engulfing ER buy signal on February 26th. The head of the formation is a head and shoulder bottom all by itself that started on a bullish engulfing ER buy signal, July 12th. And then the head of that modest, medium-sized formation was August 27th, and the last shoulder low was also a bullish engulfing ER buy signal. Smack dab at 2 out of 3 turning points on this pattern, which moved up to the neckline, broke out, tested support, the neckline, moved up to its minimum upside objective plus a little bit more, and then topped out. Now we had a big break to a low made on March 4th. Timing is about right for the last shoulder. It rallied nicely to resistance, backed up for about a week and a half now. I could see a little bit lower low, wouldn't do any damage. You just don't want to get below 442 and you don't want it to take a lot of time to do it. So somewhere, a little bit lower, 450, 447 would be acceptable. But if it stops right here, right now, yesterday's low, and starts to make new highs, that's great. No problem. So somewhere in here and very soon, I'm expecting a relatively definitive bullish type price action to cause me to be much more certain about this last shoulder and the beginning of more strength. Wheat, testing support today, already made new highs for a couple, 3 weeks or so, just the last couple of days. No head and shoulder, but a historical support level does seem to be hanging in there fairly well. Got oversold after new lows, no downside follow through, what we call a bear trap, and up it went. So somewhere right in here, in this area, I expect it to hold and make new highs. And this is a long-term potential bottom, significant upside breakout 622 plus, major upside breakout 648 plus, final upside objective minimum 750. Cattle, still overbought, almost at historical highs, not quite. Looks like it could do it. I'm overbought and significantly so, 83. Maybe it'll do a double top. I think I mentioned that yesterday. Wouldn't be surprised. The right kind of conditions are adding up nicely here. Watch very carefully for some kind of a failure on a rally in the next day, today maybe, tomorrow, next day or 2 or 3, and around the price of 204. It doesn't have to get there exactly. It could make a slightly higher high also. But, give or take a couple of dollars and then turn down. Miss Piggy, hogs, bit of a dip, coming back into support. Minor new highs failed. A little bit too much of resistance here. I think, frankly, not a very strong opinion, to be honest with you, but it looks like we're going to slip back down to 81 and maybe even lower. And back to the E-mini. Right now, we are looking at the 1 minute chart, and it is coming down a little bit more. Instead of 3 or 4 higher, we're up 2.3. And we're also about to make minor new lows for the morning session on the Spider, up 2.6. Close to doing the same thing as you would expect on the QQQ. NASDAQ, same thing, of course. YM already did it and slipping a little bit more. You guys have a great day and profitable trading to you.